Hello everybody, welcome back. Let's have a look at Wrecked City. So continuing to get wrecked this morning, nothing is changing so far. It's all the same. You can see the Nasdaq in the pre-market's obviously going down, the Dixie's going up. Everything's continuing with its current trajectory. So strong dollar, well I say strong dollar, a recovering dollar. Or an incremental uptrend in continuation for Dixie, let's just say. And then obviously negative side effects felt across the board. Bitcoin down, best part of 8%. And the Bitcoin dominance coming up to test that center Bollinger Band area, which again is a rejection area. Okay, so if we're looking for bounces, and we're looking for bounces today, depending on Bitcoin finding its temporary bottom for the day, we could be looking for some entries at this particular moment for some altcoin bounces. Now, we were talking about different altcoins throughout the live stream on Saturday, and which ones might front run that. Which ones might be the best contenders for one of those bounces. And I think I've mentioned in these last couple of videos. While doing this is essentially a spot position, almost like a futures leveraged trade for people who want to trade spot. You're basically using altcoins to help try and determine a bounce from wherever Bitcoin has stopped moving from. Sounds a bit overcomplicated, but if Bitcoin finds a temporary bottom at this particular level right now, the market will get some light relief. This is so aggressive at the moment, this downtrend, and again, it's being felt across the board. You can see here the state of this is the Nasdaq on the weekly. Well, let's just have a look at it on a 4-hourly. You can just see there's absolutely no chance. No chance. It's similar. It's almost exactly the same, really, as how Bitcoin behaved, breaking down below a multi-month area of support, basically. And then basically coming down from that, so testing it and just dropping down. So this is the equivalent of Bitcoin's $40,000 read, and obviously the power of breaking down below such a significant level of support. The panic sets in more than it has previously. And so far this has come down 3%, with a potential area of another 8% before this particular chart marks a considerable low point, one that's worth entertaining the idea of buying that potential dip, with the hope that it recovers from it. May not, it could do, but might not. So that is the overall picture of things. Like I say, the dollar's going to continue to increase. We've got tension in Eastern Europe at the moment. You can say tension, you can almost say brink of potential war, I would say, maybe, which is pretty scary thought, to be honest. And that's going to have implications. You can already see that Russia is feeling the pain as well. Their stock market's down 5% just today. I mean, at this very moment in time, charts serve little to no real purpose. We can use them to a smaller extent, but really, this is like an absolute landslide at the moment, and you just have to get out of the way of a landslide in many ways. So, for those who are looking for entry points, I mean, the way I've been doing it since selling over at this bit before this big dump, actually it was selling over here, wasn't it, before this big dump took place. And again, not selling everything, but limiting exposure. I've got 2 buy orders so far filled. This one here, which is filled at 40,600, and one here, which is 35,500, I think. So both of those, obviously, in looking back, feeling the pain, but it's all still from profit taken from the the $54,000 zone. So. It's better than a hodl position, but it's essentially knife catching, really. Knife catching, and it feels very much like knife catching, because every attempt at that knife catch, you kind of cut your fingers on it, really. The idea being is that this will one day turn around, but at the moment there's not really much signs on it. So I think it might have been yesterday, or definitely on the live streams, we were saying, in order for us to go up, for us to form a reversal, we will have to come down first, because we need to at least form some kind of positive, regular bullish divergence for that to happen. Now, this low that was printed on the RSI was quite low. Let's face it, it was pretty low, lower than the one in May. The only one that so far that beats it is the March crash. Like, that's the only one so far that beats this on the daily, as far as as far as a massive dumps are concerned. It can obviously go down lower. This is where we dropped 50% at the towards the end of the bear market. So RSI can go a hell of a lot lower than this, and obviously the lower it goes, the more likely it is to be able to form divergence at that stage. But you know, a low RSI corresponds to lower lows on price action most of the time, you know, well, pretty much every single bloody time, obviously. So what we're looking for is, again, you know, we've got at the moment a tick, a very subtle, weak little tick of bullish divergence formed on this new low that's been printed, and what you'd expect at this stage would be a bounce, you know, an anemic bounce probably, to be absorbed back into the Bollinger Band, and then, you know, maybe maybe tomorrow, or you know, throughout the next week or so, another one form. And it's only from that next low, if we were to get it, where a potential bottom could be formed. At the moment, it's not looking very good, I have to say. It's looking pretty deadly. And if we go over to the weekly, we were talking about potential big crash signal. Well, we're getting closer to it now. So we've got first level of confirmation, our red portion of the cloud. Doesn't look like much, but it is. There's a red portion of the cloud over here. That's just gone red. It's basically a cross. The cloud is essentially moving averages crossing. They form a cloud with a divergence between it. So we've got a cross there, so that's red. We've got a closure and an open now above, below the cloud. All we're waiting for now is this GQ span to close above below the cloud, right? And that's where we are right now. Obviously, it's wherever the price action closes on the week. So if we were to close this week now, and again, this is when the signal will be generated. Closing a candle below the cloud at this very moment is kind of, it's not unlikely, but it's a long way off. It's 20%. We'd have to drop another 20 to 21% to $26,000 for that signal on a weekly to be generated. That signal would largely play out in the form of one big move. And obviously, if this is a weekly, that's what we'll be looking for, one big move. If that signal is generated. And again, this week it would take a closure of $26,000 to kick in for that. And then next week it would take a little less than that. So you can say that again. And next week it would only take a closure of below 31,000 for that signal to be generated. So, you know, kind of getting closer and closer. And then as the weeks unfold, we're talking about a month, about 6 to 7 weeks. It would only take a closure of pretty much where we are at right now for that signal to be generated. So that signal just says we're gonna make it. It doesn't. Nothing's guaranteed, but what that signal would say is that a big move is implied, bigger than anything that we've seen so far. You know, in one fell swoop. And that could be similar to what we saw over in 2018, when when we were getting consistent lower highs, but a stagnant support, and then it basically just drops down. You know, this chart is too young to backtest that kind of situation, but that's what that signal would imply. For the moment, it's an incremental step down. My next buy order is at 32,000. The reason being is that that's essentially the absolute bottom of the CME gap. And if that fails, then we'll be looking at 28, which is basically the horizontal bottom around here, so 29,000, which again, you know, we could hope for the best, that we do come down to there in reverse. Again, trying to catch knives is essentially what you're trying to do here, if that's the decision you want to employ. If you want to wait for divergences, then take some time off, relax, chill out. You're not going to get ticks of divergences, you know, that are meaningful for probably weeks. So the only thing that could really catch you out from sitting this entire market out would be a V-shaped recovery, which is not impossible, but it's very, very unlikely to see a V-shaped recovery. You could see a significant bounce, let's face it, you could definitely see a significant bounce. I mean, we had them in the past. You came down to this significant level down here, and the bounce was a 27% move for Bitcoin over the space of just a few days, really. So that's the sort of thing you might miss out on, but the general trend is still going to be significantly down. The best we could hope for would be a move up to around 40,000, to be honest with you. But as this trend line here is still relevant, even though the bottom level is irrelevant now, it's definitely irrelevant, this continues to be relevant. So we can put this in here and we can form an enormous descending triangle, but more or less what we're looking for is this to be a resistance. So if, let's just say, we reversed all the way up here tomorrow, 42,000, the next day, you know, beginning of February, we'll be talking 29 sorry, 39, 40,000, and as the months draw on, before the end of February we're talking about 32,000. That's what this descending trend line refers to. And obviously breaking out of that would be one thing. Breaking out of that would probably be a very big tick to the bulls, because that's a significant level broken. Go into a period of accumulation from that level. Definitely be looking for divergences to be forming around then. And that could basically mark the turnaround point. But for the moment, we're very clearly still within that, with every aspect of the chart looking bearish. And the only thing that can really pick us up would be some volume on some bounces. But because Bitcoin is being traded alongside Nasdaq basically at the moment, this is the problem you're going to get with ETFs and all this stuff. Once Wall Street get their teeth into it, it gets absorbed into the system. I was explaining this on the live stream that basically in times like this, Bitcoin is almost irrelevant with all the fundamentals and the maximalists talking about how it's the future of this, that, and the other. I mean, it technically is. I mean, the fundamentals haven't changed, and this is what we said about the dollar. The dollar will bounce from its particular area of dump and continue on because the fundamentals of that move haven't changed. It's exactly the same as it was. The same goes for Bitcoin. The fundamentals haven't changed, but what we're really looking at here is trading, heavy trading or lack of trading in many ways. There's lots of shorts clearly piling on, but the buyers aren't prepared to buy this. Not at the moment, not with everything that the Fed's saying, not with these international tensions, which could almost certainly cause a further calamity event with this chart. But the buyers will step in at some point, but there's absolutely no sign of them coming in at the moment. Every time we come down to a major level of support, apart from the 40,000, had an okay area of being played. But generally, since then, over the last few days since we broke down below there, the CME gap did get tagged. We had a small move just to touch the outer rim of the Bollinger Band and sucked right back in, which is kind of surprised at, to be honest with you. It is only a matter of time before one of these bounces takes us back up to the 10 exponential, wherever that might be at the time. I mean, at the moment, as of today, it's 38,000. I mean, that would be a fine move to expect today if that were to work up like that. It's a 15% move. These things are all very speculative. The chances are we will revisit this 10 exponential soon, but because it's so steep, every day that goes down, it looks like it's going to be losing about $700, $800 a day, and that will be your next level of major resistance. At the moment, we can barely stay inside the Bollinger Band. They're extremely aggressive, but again, take note of not just the Bitcoin chart, but obviously institutional. Traditional markets, where the big boys are basically behaving in exactly the same way. The entire world is dumping, and there's reasons for that we've spoken about many times, so I'm not really going to bother going into it. The idea being for me is if we do see a little bit of dippage down to the bottom of the CME gap, where I've got my order placed at 32,000, which essentially marks these kind of candle body lows. I would be looking for some scalps, spot trade scalps on altcoins. Trade my Bitcoin for some altcoins. There's a few front runners in there. I mean, without me going through the list, I don't want you to start making lists of what I've got lists on, but I mean things like Algo, I suppose, and there's a handful of them. There's a handful that could see a decent bounce from these lower levels, but they would be simple scalps, and that's all they would be. Trade my Bitcoin to those, and then probably by the end of the day, or at least within a 24-hour period, probably just go back into a Bitcoin, hoping to increase the Bitcoin amount that I've traded by 5 to 10, maybe 12, 15% at best. Right. So, hopefully we will see some kind of reaction at the 32,000 area. But if we don't, 28,000 will be next. But we are still within the CME gaps. CME gaps that they don't necessarily need to be filled from top to bottom. They can just be dipped in, which is what happened a few days ago. But yeah, we'll see how all of this plays out. The good news, I suppose, if there's news at all, is that with every single CME gap that's below us, that's been generated in such a significant downtrend like the ones we've seen, there's more CME gaps above us. So for those who are all talking about the gaps to be filled down, that's true, that is true, but don't worry, as we have such horrendous weekends and horrendous weeks, there's going to be more CME gaps above us. In fact, obviously there's going to be one above us at the moment because the weekend was pretty nasty. But I'll leave it with you there, guys. I hope you have a nice day for what it's worth. Take it easy.